When it comes to dividend investing, one of the most impactful inputs to building a large portfolio and seeing the power of compounding take place is to reinvest your dividends into more shares of more stocks or ETFs each and every time a dividend is distributed to you. Now, one of the very popular and common ways to do this is, of course, to have DRIP turned on, or dividend reinvestment plans within your brokerage to basically automatically buy more of whatever stock or ETF just paid you the dividend. Now, when it comes to this, I often get asked if I DRIP in my multiple dividend portfolios, which are currently valued at over 7 figures altogether. And the easy answer is no, I don't, of course not. But in this video, I'm going to go over exactly 3 reasons on why I never DRIP within my brokerages and exactly what I do instead. Now stay tuned because we're going to go over all this and more. Right after you, please drop a like in this video and subscribe for more content like this. So for those of you that are a little bit newer to dividend investing, I'm sure that you've at least heard of or even seen within your brokerage DRIP or DRIP or DRIPS. Now again, this stands for Dividend Reinvestment Plans, Compounding Your Earnings. And according to Investopedia, it says a dividend reinvestment plan or DRIP is a program that allows investors to reinvest their cash dividends into additional shares or fractional shares of the underlying stock, although the term can apply to any automatic reinvesting arrangement set up through a brokerage or investment company. So again, simply put, in your brokerage, if you have DRIP turned on, let's say you get paid out a $10 dividend from Apple stock. Now, instead of having that cash go into your cash balance within your portfolio, if you have DRIP turned on, the brokerage will automatically buy you $10 more worth of Apple, normally on the day that the dividend is paid. Now, this brings me into my first reason on why I have DRIP or automatic dividend reinvestment turned off. And simply put, it's because I don't want my broker to buy more shares of any stock or ETF that's paying me dividends at the exact time and day or shortly after whenever the dividend is paid. Now, my reasoning being is because market conditions change very, very frequently. If you look at the market just year to date S&P 500 is up over 16%. And if we zoom out from the last year, there's been plenty of times where the market has been very, very cheap. And there's been times, like as of recent, where the market overall is getting quite expensive, at least in certain sectors. Now, by having DRIP turned on, let's say that you get paid out a dividend as of July 19th, for example. On July 19th, for whatever reason, the market was up quite a bit. And on July 19th, let's say you got paid a $10 dividend from Apple and the brokerage automatically bought you $10 worth of Apple in a fractional share. Well, because it happens automatically and you don't really have any say, it might have bought you an Apple at the top or near the top of where Apple, for example, might have been currently trading. Now, instead, what I do is I always have my dividends paid out into my cash balance in my portfolio. And then what I do is on a daily basis, look for different opportunities within the market. Let's say a certain stock or even a certain industry is very red for whatever reason. In that case, maybe I would take some of my cash balance and in that more beat up industry or stock because I might see some opportunity there. And let's be real, as dividend investors, the cheaper you can buy stocks or ETFs, the higher your starting yield is. And of course, in theory, the higher your upside potential is. So instead of having the brokerage automatically reinvest my dividend payouts, I personally have all my dividends sent to my cash balance, and then I handpick buy stocks or ETFs on an ongoing basis where I see opportunity. Now, the next reason on why I always have DRIP turned off and why I always send dividend payouts to the cash balance portion of my brokerage is because sometimes I change my mind on what I want to buy or maybe even what I want to sell. Now, once again, as we said earlier, when you have dividend reinvestment turned on, it's going to buy you shares or fractional shares of whatever just paid you the dividend. So for example, let's say you're holding onto the Home Depot and Home Depot pays you a $25 dividend. Instead of having dividend reinvestment turned on and sort of being forced to buy more shares or a fractional share of Home Depot, maybe instead you see some opportunity in, for example, United Health Group. Now, like I said earlier, throughout the days, throughout the weeks, throughout the months, you're going to see different opportunities come and go. And I can't speak for everyone, but I don't always want to buy the exact same share of any given stock or ETF that pays me out a dividend. For example, let's say Procter & Gamble paid me out a massive dividend because I've been holding onto PG shares for years and years now, and I've been really stacking the amount of PG shares I have, but at this point I'm pretty good on my position and I don't really want to add any more. Well, in that case, maybe I want to buy some shares of Walmart with the dividends, with the cash balance that PG, Procter & Gamble, paid me. Which once again brings me back to my point, you wouldn't be able to do that if dividend reinvestment is turned on. Now, my final point and final reason on why I don't and will never turn on dividend reinvestment throughout my brokerages is because for me over time personally, I've changed my overall strategy when it comes to investing slightly, where maybe I want to invest in some lower yield, higher growth stocks or ETFs or vice versa. And I'm going to go out here on a limb and say that a lot of newer investors do this. When you first start investing in the stock market, you're hopefully going to come up with some sort of strategy that you can sort of stick with. And I definitely recommend doing so. But over the years, at least for me personally, my strategy has sort of changed. Whether it's, for example, I want to start buying some more stocks and ETFs that pay a little bit of a bigger dividend and maybe have a little bit less growth potential. Or maybe it's the fact that my portfolio might be a little bit too heavy a certain sector or even a few individual names. Regardless, whatever the reasoning is, over time your strategy is most likely going to change at least a little bit. And with DRIP turned on, it's going to be hard to readjust your strategy, knowing that all the dividends that are coming in are just going to buy more and more shares of whatever stock or ETF that the dividend is being paid on. So that being said, for me personally, having the money sent to my cash balance makes much more sense, knowing that I might want to be a little bit more nimble, and that just knowing that over time strategies do change, and I want to be able to have complete control over that. So there we have it, guys. Those are 3 different reasons on why I personally never turn on DRIP throughout any of my brokerages, and never have since the start of my investing journey. Now, it's not to say that for the investor out there that might be a little bit more of a passive investor, that it feels perfectly comfortable with buying more and more shares of whatever stock or ETFs are paying dividends in their portfolio. I'm not necessarily saying that that's wrong or even a bad strategy at all. But for me personally, and I think a lot of other long-term dividend investors out there, we like to be a little bit more hands-on. And the fun thing about investing in the stock market is it's exactly that. With the amount of liquidity in the stock market and all the different choices between all the stocks and ETFs, I think having dividend reinvesting turned on sort of limits that almost. But when it comes to DRIP or dividends being reinvested automatically, what do you guys think about it? Do you personally have DRIP turned on in your portfolio, or do you have it turned off? Comment down below. If you enjoyed this video and want to see more videos like this in the future, make sure to please drop a like on it and subscribe for more content like this. Thank you for stopping by as always, and I'll see you in the next one.